Everyone loves to brag about how much their home's worth these days. My house just went up 200 grand. Cool. But can you spend it? Because until you sell it, refinance it, or borrow against it, that wealth is just a number on paper. And if you don't have income, credit, or job to qualify for a loan, well, good luck turning that equity into anything useful. That's the part that no one tells you. Your house can make you feel rich while you're living broke. Let's be real, most Americans aren't sitting on piles of cash. The average homeowner got about $300,000 in equity, but only $5,300 in liquid savings. So they are wealthy on paper, but just one emergency away from swiping a credit card for a car repair. Here's how this plays out. Your home value rises. Let's say it's worth $500 now and you own a $300. That's $200,000 in equity. Sounds great, except you can't use it unless you sell the house, take a HELOC, or do a cash out refinance. And every one of those options depends on what? It depends on your income, your credit, and debt to income ratio. No job, no access. Bad credit, no access. Too much debt, still no access. So that equity might as well be buried in the backyard. Banks don't care how much you own, they care about how much risk you are. And the average home equity line of credit HELOC requires a credit score of 680 plus, debt to income ratio under 43%, and enough verifiable income to handle the payments. But here's the reality. Nearly 40% of Americans, they don't even have a credit score about 700, and nearly half of US households live paycheck to paycheck. So yeah, the equity is there, but you can't touch it. And here's the trap. Everyone talks about net worth like it's a scoreboard. I'm worth $500,000. No. Your house is worth $500,000. You're worth whenever is in your checking account after bills, because you can't swipe your home equity card at the grocery store. You can't Venmo plumber in appreciation points. And if the market dips or your income disappears, all that paper net worth evaporates the moment the bank stops picking up your phone calls. It's insane when you think about it. You own a home outright, and you still cannot afford a new roof because every dollar of value is trapped behind paperwork, credit checks, and more underwriting. And if you actually do pull that money out, it's not free. You're just taking on more debt, and this time at 9 to 10% interest, or maybe even more actually, because HELOC rates have doubled since 2021. So you get to access your wealth by paying interest to the same system that told you home ownership equals freedom. That is not a safety net, that's a leash. And here's the shift. Owning a home is fine, but depending on it is dangerous. If all your wealth is trapped in one property that you can't access, that's not wealth. It's a liability disguised as stability. Real security is having liquidity, cash flow options, the freedom to move, invest, or auto pivot without begging a lender for permission. If you can't do that, you don't own your house, it owns you. So yeah, the home value went up, congrats. But until you actually use that equity without going into debt or begging for approval, it's just monopoly money. Looks expensive, changes nothing. This is Thrive Network. We don't celebrate paper wealth here. We build the kind that you can actually spend. Comment below, click like and subscribe, and we hope to see you on the next one.